Welcome back to another episode of Cup of Joe Crypto, where I bring you the latest news on in Bitcoin, blockchain, and all cryptocurrencies. Guys, let's jump right into the market. Market cap showing $246 billion with BTC dominance gaining, bringing it to 67.4%. Slightly red day today with BTC sitting at $9,195, with altcoins in the top 10 all having the same losses, similar to Bitcoin, except Tron. Tron had a little bit of a rough day today with a 7% loss. Overall market sentiment, I still think, is a positive with the recent swing from 7,500 all the way up to 10 grand. It even touched and back down. We're sitting around $9,200, with where Bitcoin was just not even a week ago at 7,500. I'd say that we have seen the dip, and I will show you in the future article why I believe that $10,000 is not far away for Bitcoin to stay. I think once we hit that break, that 10.5, 10.7 range, I don't know if we'll ever see a four-digit Bitcoin again. So hopefully we see that 10.5, 10.7 mark for Bitcoin. Jumping right into the news, guys. U.S. Congressman to introduce bill clarifying digital assets issuance. This is by Jory Kant. The United States Representative Tom Emmer intends to introduce new legislation to provide regulatory certainty for cryptocurrencies. On the 24th of October, Congressman Tom Emmer, who serves as the ranking member of the House Financial Services Committee's Task Force on Financial Technology, announced that he is introducing a new law that can provide a clear path to regulatory certainty for cryptocurrencies and other emerging technologies under securities law. This bill would allow companies that are already compliant with security laws or who have already acquired a securities exemption to distribute their assets without subjecting them to further regulations. According to a tweet by Weiss Crypto Ratings, the bill would provide companies who have complied with the U.S. Securities and Exchange Commission registration requirements with legal protection from some of the SEC's enforcement actions. Emmer said in an announcement, and I quote, "Companies that have followed our current rules of the road, even if convoluted, deserve the certainty that they can offer their digital asset to the public and help distribute to a truly decentralized network. I am hopeful this nonpartisan legislation will receive strong support and help ensure investment in the United States for these extraordinary technologies." In July, Emmer reintroduced his safe harbor for taxpayers with forked assets bill in the U.S. House of Representatives in order to foster blockchain industry growth in the U.S. by lessening the burden of businesses to figure out relevant tax laws. In Emmer's own words, taxpayers can only comply with the law when the law is clear. Questioning Facebook CEO Mark Zuckerberg. Last week, the Minnesota Republican questioned Mark Zuckerberg, who was testifying before the House Financial Services Committee on Facebook's Libra, asking him to explain the efforts made to engage the broader blockchain ecosystem in Libra's exploits. Zuckerberg put forward the shared control of the Libra Association and said he hoped that the association will work to educate the public about the industry. So interesting. It's good to see people are trying to simplify and make life easier for those who are compliant and follow the rules. Um, I think those who have been following the rules need their lives to be easier, as for everyone who follows the rules. It also, some of this technology, you guys, can be so confusing. So even for taxpayers like us, we need to simplify the process to make sure that we are doing what is necessary to comply with the rules and regulations of everybody else. Next story. Pretty crazy to think about, but Bitcoin just hit 1 billion in all-time transaction fees by Christine Kim. On October 30th, the Bitcoin blockchain reached 1 billion in cumulative transaction fees. This milestone is a really cool milestone just because it shows how much people value block space, said Brian Alds, founder of Bitcoin wallet Bill Fodl. And that's it, something people don't mind paying for, which I think is really important moving forward. According to data from blockchain analytics startup Blockchair, the amount of Bitcoin transaction fees collected annually has actually decreased in recent years. This is due to the advent of scaling solutions on Bitcoin, including segregated witness and the Lightning Network. And while the cumulative amount of Bitcoin transaction fees converted to USD amounts to roughly 1 billion, the amount is actually much larger if you consider the market value of Bitcoin today. According to the Coin Metrics data, 204 204,808.3479 BTC have been doled out in transaction fees to miners since 2009. At today's price, that's equivalent to $1.86 billion. The cumulative size of transaction fees on the Bitcoin network is only set to grow larger in the coming years, especially as those alternative mechanisms for rewarding miners such as block subsidies gradually decline. Over the long run, the transaction fees will eventually have to replace the block, said James Lopp, CTO of Bitcoin management startup Casa. There's a reason why it's called the block subsidy in the code. It is because the subsidizing the security of network, adding, and I quote, the understanding all along is that the subsidy via inflation will have to be replaced by the people who are paying to use the network via transaction fees. Securing the Bitcoin network. Stepping back, transaction fees play three key roles on the blockchain, all of which serve to secure the integrity and censorship resistance of the network. First, attaching fees to Bitcoin transactions discourages denial of service attacks, also called spam attacks, from slowing down the network. When you create a transaction, you're able to use bandwidth and write data onto the hard drive of anyone running a node on the network, said Lopp. If there's no cost to doing that, then you can saturate everyone's bandwidth and fill up everyone's hard drive. Second, fees serve to prioritize which transactions get confirmed and written onto blocks faster than the others. Daniel Steinberg, VP of crypto mining consultancy Navier, said, I quote, it's very simple, you pay more. You get your transaction accepted more quickly. So that mechanism is a fair way to participate in a pending transaction pool. Finally, and perhaps most importantly, transaction fees also ensure transaction finality. Coupled with the Bitcoin block subsidy, which yields 12.5 BTC per block and decreases by 50% every 4 years, transaction fees incentivize Bitcoin miners from purposefully stalling or editing the blockchain. Without the monetary incentive, miners could easily be bribed by malicious actors to unfairly withhold all of certain transactions from being committed to the blockchain. In aggregate, the transaction fee plus the block subsidy provide for the probabilistic transaction finality of the Bitcoin system, said Pierre Richard, founder of consultancy startup Bitcoin Adversary, adding, I quote, the greater the finality is, the less time transactors have to wait before having confidence in and the transaction will not be censored or double spent. So what's ahead? We have another 10 to 13 years of decent subsidies left before it drops away to pretty negligible amounts, said Bill Foddles Ald. When this happens, miners will have to start adjusting profitability measures around the comparatively more volatile values of transaction fees as opposed to block subsidies. You have to start thinking more about the game theory around miner profitability and what would happen if the profitability of a miner become a lot more volatile from hour to hour, day to day, said Lopp. For example, we already know there are both daily and weekly cycles of demand for block space. So, pretty crazy to think, guys. Who would have thought when Bitcoin was first created that Bitcoin would honestly ever hit $1 billion in transaction fees? Pretty cool to think of where we come, but at the same time to also remember how early we are. That's man. To me, you have to be a gambler to be in this space. You really do. You have to have that gambling blood in you. And you have to have the belief that the blockchain technology, Bitcoin, and not all cryptocurrencies, and cryptocurrencies in general, have the potential to change this world. And when I got into the space, I'll admit I first got into the space because I wanted to turn $10 into $100. But before I ever invested my money, I wanted to educate myself and understand what am I putting my money into. And the more that I dove into not at first Bitcoin, but blockchain technology and the decentralization that it brings, I fell in love. I've always had a not a bad relationship with banks, but I've always looked at banks as they're making out and they're making out because of us. And I wanted to be part of something that rewards us, the people, more so than those who run and print the money. Guys, you're letting your money sit in a savings account, making, if you're lucky, 1 to 2% on your money. While they turn around and make 10 to 12% on your money. Doesn't sound right, doesn't seem fair. We need to reward ourselves. We work hard for our money, so if you're lucky enough to have extra money to invest it or to store it away, you need to be rewarded for somebody who's lending out your money. I love what the Bitcoin, blockchain, and cryptocurrency space is doing. I love how early on we are and how we can sit back and watch everything grow and eventually prosper. Good times ahead. So I'll end the news cycle on this note. Bitcoin price predicted to move up to $10,000 region by prominent crypto trader. Both sides are playing tug of war once again, but Josh Rager believes that the bulls might push the BTC price above $10,000. Bitcoin is gearing up to touch $10,000. A precedent indicator turns bullish. And cryptocurrency trader Josh Rager has just shared his fresh take on the Bitcoin price action, while the top coin keeps seesawing in the $10,000 range. Bitcoin is gearing up to get to the $10,000 mark, and if the top coin surges above the resistance level at 99,600, it would potentially open the door for the $10,000 level. Rager believes, however, this bullish scenario will be invalidated if BTC breaks below the $8,700 support level. And in his recent tweet below, BTC lower time frame chart shows price in a few $100 range. Daily support below, while overhead is the weekly and monthly open resistance with a break and close above these areas on higher time frames will likely be a signal to move up in the 10Ks. So, following Bitcoin's headline grabbing price jump on October 25th, it has been struggling to make a decisive move in either direction. Any attempt to break out of the $100 range has been instantly rejected so far, and as of now, the top coin is sitting at $9,235 after a 2.3% drop over the last 24 hours. So then it says a precedent indicator turns bullish. In other news, CoinDesk Omar Gabou noted that Bitcoin's 3-day MACD chart turned green for the first time in 3 months. This is a major price indicator that allowed traders to accurately spot the bottom in late December of 18 after the BTC price plummeted to $3,100. Hence, there's a good chance that BTC is ready for a bullish breakout that would allow it to reclaim its yearly high of 13,800. So, guys, again, leave a comment where you think BTC will be not a week from now, let's say at the end of November. Everybody else throws out predictions. So my prediction is at the end of December, BTC will be sitting at the $11,100 mark, which would be a gain of about, from where we are, $1,900. Just saying, that's where my thoughts are. I think we're still in the bullish run. I think we're going to see positivity in the markets, and of course with that comes price rise. Guys, please make sure you subscribe to my channel. It is hard to get this channel growing. I would love for you guys to hit that like, subscribe button, share with your friends and family, and educate them on the blockchain technology, Bitcoin, and what it can do for not only them, but for the rest of the world. Guys, thanks for watching. I look forward to seeing you in the next video. Until then, see ya!